What's up, guys? Thank you for tuning in. Welcome back. Today's video is going to be how I use the 2-2 and the 3-1-2 reversals coming from the STRAT method. This video is not going to go into what the STRAT method is, a in-depth of what the 2-2 reversal is. If you guys want me to do videos like that, go ahead and comment below the type of videos you want me to do. I will do a high overview of what those are throughout the video, but I want to focus this video more so on how I take these methods into my trading and what I see and how I chart it to hopefully give you guys clearer picture on what your entry exits should be, your take profits, your stop losses. Once you identify those within your trades, that takes the emotion out of it. You don't want to have a bunch of emotions going into trading. As you know, if you guys are newer, emotions are very hard to control. So I found that these methods, using these types of candlestick patterns, really help me take the emotion out of it and clearly identify where my entry should be, what my profit target should be, and where my stop loss should be set. And I'm trying to incorporate also scaling out into this as the price moves in the direction I want it to go, raising your stop loss along with it and identifying new correct levels of where to put your stop loss, I think is also important as well. So I'm leaving this up on the screen for a second. Take a screenshot, take a picture, whatever you need to do. These are the reversal patterns that I look for within the candlesticks. So I just wanted to share this with you guys. Let me move this out of the way real quick. So one of the things right here, I wanted to start with a clear picture. So I use TradingView. One of the indicators, it's the only thing I use. I don't use EMAs anymore. You can use all that type of stuff, but I'm learning different ways to use just straight price action. And this is how I'm starting it out, taking all those indicators off, trying to learn how the candles move. If you learn that, I think you're going to set yourself up for success a lot more than relying on, RSI, MACD, and, all these momentum type of indicators that are technically lagging indicators. Straight price action is what's currently happened right in front of you. So if you can learn to trade that way, that's honestly your best bet. But going back, so like I said, the only indicator that I use is called the STRAT Assistant. So for TradingView, you go to indicators, just type in STRAT Assistant. It's the first one. It's the Ricky Z. Carely one. So I'm gonna go ahead and turn that on now so you can see it. And this is essentially what it is. I did a little bit different customizations with the colors, just so my eyes can see them quickly. One of the things with the STRAT method, it talks about the multi-time frame continuity. Essentially what that means is just looking at multiple time frames to help determine or help find the probability of a move, either going long or short, but using the multi-time frames to help kind of bring it all together, I guess is what I'm trying to say. If you have, so what that is these numbers right over, or these letters and numbers right over here: 30-minute, hour, 4-hour, daily, weekly, monthly, quarter. I have those up here as well. These are just showing you where price is for that particular time frame. So green obviously means up, it means bullish. Red arrow down obviously means bearish. So what that is telling you is, if you're seeing green like we are with Apple right here, I'm on a 30-minute chart with Apple. If we're green across the board like this and you're trying to short Apple, you're going against trend. You can try and scout for opportunities. I'm not saying not to take a short in Apple, but know that when you take a short in Apple and you see all green across the board, multi-time frame like this, you're going against trend. So your trade is going to go against you. It's going to be that much harder for you to be on the right side of probability. When it comes to trading, everything's probability. It's all numbers. No one's 100% right. That's why you have stop losses. That's why you have risk management. These are the things you need to incorporate. You're not a bad trader if you take losses. You're a bad trader if you take those losses and you don't learn from them. So going against trend, knowing that going in and taking a loss doesn't make it seem as bad if you knew that going in. If you're a new trader and you get in on a put because someone calls it out and you're losing money and you have no idea why, that's when you get pissed off. That's what trading with emotions is. So going back to this and trading price action and learning this, it takes all the emotions out. So that's one of the things with the strat method they talk about. Again, this video is not going to go heavy detail into that. Let me know if you guys want me to do a video on that. I'm more happy to do that. Put it in the comments below. But a couple of the things I want to talk about. So I like the 2-2 reversals. It could be 2 up, 2 down, or reversed. And then the 3-1-2s. So going back to the indicator themselves, these numbers. So you have the 3-2-1 numbers. Essentially what these are, high levels, 3 is an outside bar, a 1 is an inside bar. And then you could have 2 different types of 2 candles. So you could have a 2 up or a 2 down candle. A 2 down is when price breaks below the previous. So if you're looking at this candle right here, you have a 2 down. Price opens right about the same 148.80 area. It tries to break up. So you see this little red wick right up here. Can't, and then it falls down. So that's considered a 2 down candle. If we're looking at the next candle, so we see where price opens up on this green candle, which is about 148.74. Price tries to go down. It fails, comes back up and breaks the high of the previous candle. This is what makes it a 2 up candle because it's above the 50% mark. I don't know if it's exactly 50%, but it's the top half of the previous candle makes it a 2 up bar. But knowing these types of things help determine your entries levels, or your entries, your take profits, and your stop losses. So one of the things, like I said, is I used a 2-2. So here's a 2 down, 2 up reversal that I would have played. So keep in mind, this is Apple 30-minute chart. All of this play in the morning, yes, you could have captured it on 5-minute, 3-minute, 1-minute, whatever. All of that, that's all tradable. I just personally don't like to trade that because it's a lot of noise. I like to be a little more clear on what I want to do. So I choose a 30-minute. I think it's really clear using these 2-2s or the 3-1-2s. I think you get a clearer picture. I also go to the 15-minute. We'll look at that as well. And I'll show you that in a second. But essentially, I look for the 2-2 reversal. Okay. Oh, let me remove that. And using the previous candle, that's what helps to determine your levels. So going back to this example, we have a 2 down right here, right? We have a 2 tried to go a 2 down, failed, and became a 2 up. So our entry would be the break of the previous candle, which was 148.85. Our stop loss is going to be the bottom of the candle, which is 148.20. Okay, so we're 65-cent stop loss, right? Our take profit levels, we technically have 3, 4, 5 of them, but I'll scale the first take profit right here. Second take profit is the high of that candle, and then you just mark the highs of the previous candles. Those are all your take profits. As this move goes up, you just raise your stop loss. So your stop loss, once you get above probably break even, I would probably move my stop loss to break even or even right below it, right below your entry. If we're looking at the next candle, you can see the wick never touches that. Okay. So that's when you can move it to break even. And that's only if you want to scale it out. If you don't, just do your take profit level, your stop loss, sell your trade right there, get in or out. But as you can see, the next candle touches the high of the previous candle. So you would have gotten in at 148.85 to 149.37. Your second profit target level, 149.62, and then rode it all the way up to 150.51. So that's a 2-2 reversal. Hopefully that makes sense for you guys. Let me remove my drawings real quick. I'm going to try and find a 3-1-2. So give me a sec. If we want to look at a 15-minute time frame, it's the same. So here's a 2-2 reversal right here. So 2-2 reversal. Your entry is this guy. Your stop loss is the low of that candle. So again, clear entry, clear stop loss. If the price gets to that level, you should automatically have a sell order for that price. If you don't, you want to do a mental stop loss, that's fine. That's the price, set an alert or something. That's the price you want to get to, sell it. Don't let it lose anymore. Your profit target, the top of this candle. As you can see, 3 candles. So was that 45 minutes or so? Well, let's call it almost 50 minutes or whatever. It hits that. So that's how you can trade the 15 as well. I still think that's a clear picture. If we go down to the 5, lines get a little hairier. Not hairier, but there's more movement involved, a lot more candles. You can absolutely trade these as well, if that's your style of trading, but learning to trade the candlestick patterns, just what you see, the simpler, the better, in my opinion. And if you can trade to a point where it gets simple like that, you're just going to be better off. You're going to set yourself up for success in any type of market. I can tell you the market that we've been in the last few months is completely different from the bull market we had last year. And it's forcing even a lot of great traders to reevaluate what they know and adapt new strategies. So if you can just read straight price action, you trade what you see. That's honestly the best way you can trade. This right here on a 5-minute, I used to trade 5-minute all the time. And it's a lot more noise. Go to a 15 or a 30. You're not forced to, market open or the power hour. You can trade those absolutely. But you have less candles. You don't have to feel rushed to jump into a trade. You can get into a trade when it makes sense versus being forced into a trade. If you force yourself into a trade, again, that's trading with emotions. These types of methods, these are clear pictures, clear lines on when you should get in, when your target is, when your stop loss is, in my opinion, at least. So let's look at, let me see if I can find one on SPY. I want to try and find a 3-1-2 for you guys. I think there was one the other day. Yep. All right. So this was a nice move on SPY the other day. Here's a 3-1-2 pattern, right? Okay, so you have a 3-1-2. So essentially what that is, you have an outside bar, meaning price broke above and below the previous bar. That's what makes it an outside bar. Okay. Next, you have an inside bar, which is price didn't break either side of the previous bar. That's a huge indecision candle. So if we go back to like the 5-minute or the 2-minute, if we look around 10:30, this is just going to be, I bet you it shows you a range. So let's mark. I just want to mark these right here real quick. Let's do this. Or not. Let's try this again. So let's try and find that on the 3-minute. Okay, so here we are. That's what we drew on that one inside bar candle because price didn't break above or below. And look, you try and trade that, that's just theta eating your contract. That's giving your profits to the market right there if you try and trade that. All right, so let's remove these. All right, so let's go back to the 15. We're getting off track. My bad. But going back to the 15, let's go back to where we were. Let's find where our 312 was. All right. Where are we on? Maybe we're on the 30. Sorry, guys. Where did it go? There we go. All right. My bad. That took a little bit longer than expected. All right. So going back. So that's the inside bar, what we just looked at, meaning price again didn't break above or below. So that's an indication. Okay. Now we're going to play whatever side that it comes out and breaks. Okay. So our entries are going to be the highs and the lows of that inside bar. Again, this is a 30-minute time frame. So this is about 10:30. I'm on West Coast. So it's about 10:30 my time of where my trigger would have been. The break, again, above or below, will determine which direction we're going to get into the trade. So this would have been a put. So my entry would have been a break of the 1. Stop loss would have been the high. So stop loss is 384.57 in this case. As you can see, price doesn't touch. Let me expand these. So price never hits the stop loss. Okay. So price opens, tries to push up, fails. Price drives back down here and then ends up closing. So entry would have been the break of this. Okay. You could have waited. So you want to wait till this candle closes right here, open, tries to fail or tries to go up, fails. Entry would have been right here. Let me zoom back out. Couple different profit target areas. The bottom of the outside bar. So let's go ahead and mark that. That's your first profit target. Second profit is the next low. So it's right here. That's your next profit target. Let me zoom out a little bit. That's your third profit target. There is your fourth profit target. As you can see, for the rest of the day, price just kept falling. As you hit these levels, obviously your stop loss should be moved with it. So your stop loss becomes those areas. So once you break this area, your stop loss should be here. Once you break this area, your stop loss should be that. Then there, and so on and so forth. But these are ways where, one, you can capture move and try and incorporate scaling into trading. If you're newer into trading, please don't focus on scaling right off the bat. You're just going to make yourself crazy. Trade one contract, set your levels for your stop loss and your take profit. Once levels hit, sell. If you're in profit, you're in profit. If you're in a loss, you're in a loss. But get consistent with being able to take profit when you're supposed to, because that's going to instill the discipline that you need to introduce scaling into your trading and know how to move your stop losses and your profit targets as you grow as a trader. So hopefully this was helpful for you guys. This is a 30-minute, like I said, 15-minute. I don't know if we would have caught a 3-1-2 reversal per se. I don't know where, there we are. But just going back to, let's see. Yeah, no, not a 3-1-2, but we had a 2-2 continuation pattern. So that's these two candles right here. Open, again, price opens right here, tries to break above, it can't, it fails. That's our entry, is the bottom of this candle, which is right about where our line was, and then you ride it all the way down. But I personally, like I said, like the 30-minute to see these guys. I think it's a lot more clear. So that's all I have for you today. Video's a little longer than I wanted it to be, so apologies for that. Again, comment below what type of videos you want me to make for you guys. If you want me to go into details of specific things of the strat method. I'm still in the learning process of that and trying to incorporate that into my own style of trading. So I'm not an expert in the strat method by any means, but I am more than happy to do a ton of research videos and kind of put my spin on it for you guys. So you can hopefully take that and put your spin on it and make it your own. One of the biggest things about trading, I think personally, is make trading your own style. Do it to how you normally function as a human being. Everyone trades differently. Everyone has different signs or different things they see when they look at charts. That's why there's so many types of indicators and different types of things out there. If you can find a way to take those and take that information and kind of curate your own type of style and method that works for you, you're going to be setting yourself up for a lot more success, just because you're not trying to change a complete routine that you've been doing for X amount of years and doing a complete 180. Just incorporate small different things here and there, and you'll have a much higher success rate. So again, like, comment below, subscribe. I'll be doing a lot more of these videos, posting them on there, providing education for you guys. I think that's something we don't have enough of. There's a ton of education out there, but a lot of traders that you see online, they don't talk about this. They just show the fancy stuff. So guys, have a great rest of your weekend, and let's get ready to kill it in the market this week.